Hello, my lovelies. How's it going today? Um, just wanted to give you guys a quick look on how you should be managing some of these trades, and not only that, but how you can better your risk management um, to not lose as much if a trade goes against you, right? Because we buy key levels is what we do. The market sucks right now, but buying key levels and being patient has been something that has always been profitable for a lot of people. And during normal market conditions, it is profitable. Market's just being an asshole right now. So, where am I getting to with this? I'm going to look at a couple of our trades and then look at one that I'm lining up and show you how you should be managing these. So, I'm looking at one. We said when it was on this trend line, basically, we're going to buy one on this trend line. Like that's where we're going to buy it at. That was our trade, and it lined up with the 0.5 fib as well. It wasn't a bad entry. Like that's yeah. So here's the thing, right? If you buy it on this trend line, we're looking at what? Let's call it 72k sats. Okay, and then up to here is like 3%, right? At the daily or the 4-hour 20 EMA. It's only like 3.75%. However, on some of these trades, on some of these quick flips, um, where it's up to you to manage the trade and figure out how much profit you want to get from it. A good thing to do is kind of sell some partials near the 4-hour 20 EMA or the 1-day 20 EMA. You got to pick which one you're looking at. But maybe sell a portion of your position, and then we had a plan for a stop on a daily close below the trend line. So at that point, it's pretty much break even. Or I'm sorry, let me go to the day. That's not quite true. 1 second. Yeah. Here's your close below the daily trend line, and that's actually above break even, above 72 or 72070. So that's like right at break even, right? So if you would have sold a partial, let's say you didn't sell a partial and you had your risk management on the daily close below the trend line, which it should have been, you would have been out of break even. Okay? No harm, no foul there. And even selling a little bit of a partial would have brought your entry price just a little bit lower, but selling a partial at 4% almost is, might not be worth it to you guys. So let's look at another one, KNC, that moved against the entry. Here you are. So we said KNC would bounce near the 50 moving average, right? It bounced near it. So you get in somewhere around here, right? We'll call it 21,500 sats on average, right near the 50 moving average. And then from there, if you go to 21.5, and again, we're looking for larger positions than 5%, right? 5 to 10% on quick flips is typically something that's easy to get. You would have gotten it. You can sell a partial, put a stop at break even, or a stop on a daily close below the 50 moving average. And then if you're in at 21.5 and the daily closes at 21.1, it's almost no loss. Like it's almost no loss. And if you sell some of it for 5% and kind of scale some of your initial position out, and then have your risk management and hope that it moves away from it, moves to the upside, and then you know we're going to get stopped out, it's a really good risk reward on that trade. And under normal market conditions, guys, we're going to be making money on these trades. Like, don't lose faith. We will be making money on these trades. So, you have to make sure you stick to the criteria of like stop it on the daily close below the 50 moving average. There's nothing below it there, and look at it as it closed below, and now look at it. It's at almost 20k sats, and that shows you why you would want to stop on a daily close below the 50 moving average. So you got to manage these trades. You have to on these trades during crappy market conditions, if you want to have a little bit more risk management to where you have a lower risk tolerance and you're willing to jump out earlier, it's probably the right thing to do. I mean, you could have gotten almost 5% from this move, put a stop either below break even or daily close below the 50 moving average and just kept it there. Now, most of the time when we're buying key levels like this under normal market conditions, you won't need as much risk management because they bounce. However, there is no buying pressure right now. I expect some buying pressure to step in soon, but it's just important that you guys are on your trades and that you manage your trades, especially in the quick flips, which is all that we're interested in doing at the moment. So, um, as your reward for watching, lining up a quick flip on sub here, and I'll show you my rationale. So, this daily trend line, let me line this up a little bit better. There we go. This daily trend line. I'm expecting it to just bounce momentarily, at least. Like, we'll look at the 4-hour. There's a reason why. Because if we put on the RSI, the 4-hour RSI is at 26, right? And the price is at 6,025 sats. So if it gets near this trend line near like 56 to 50, anywhere between 55 to 5,700 sats, that daily RSI should be darn near 23-ish, and which is really, really oversold. It's really low. So I'd expect some respect of this trend line, and with the 4-hour RSI being that low, for a quick bounce, even up to the 4-hour 20 EMA, which, this honestly should get you at least 10%. Like up to 6,000 sats from 5,500 is almost 10%. But yeah, right up near there, you get your bounce, you get out. And on that, your stop, for me personally, would be a daily close below this trend line. So yeah, the risk reward is there. And as we get a little more buying pressure into the market, I mean, anybody's been around here for a while will tell you these setups work. The market is just being a complete wet rag at the moment. And so you just have to stick to your risk management. So that's really quick, all that I got. I'm going to buy a sub on this trend line and stick to my risk management on this, okay? So, yeah, catch you guys on the flip side.